Hello, everybody. So this is a viewer requested video where I want to analyze the sportswear, the apparel, the shoe stocks, and namely the more innovative stocks in that sector. And so I have run Lululemon, Figs, Crocs, and On Holdings through my spreadsheet. And this is my expanded spreadsheet where I have two metrics, my favorite metric, which is enterprise value over gross profit over revenue growth, which is asking the question, how much am I paying for each percentage point of forward growth? And we can see in that spreadsheet that Lululemon is clearly the more expensive stock out of all of the four stocks here. And then I've also added the rule of 40, or my own version of a rule of 40, which is adding revenue growth and EBITDA margins together. And of course, the goal is to get as high of a number as we can. And we notice that we have three stocks that are well into the rule of 40 category, and even one stock On Holdings, which is the surprising stock of this video that I'll finish talking about at the end of the video, which has a rule of 60 number as far as revenue growth plus EBITDA margin goes. So first of all, let me go over Lululemon. The reason why I have Lululemon in there is because Lululemon is kind of the reference. You know, it's kind of in the beverage market. You have Monster was the example, and so you compare Celsius to Monster. Well, in the apparel market, in the sportswear market, the example is Lululemon. They were nothing in the 90s, started out with nothing in the 90s, and they are now a leading brand with a crazy enterprise value of $64 billion just for selling yoga pants. And they essentially took this meaningless, obscure piece of clothing and made it into a global phenomenon. And that's the whole idea of investing behind a neo brand, is finding a product that could do like a Lululemon, that could be like a Lululemon, because clearly, if either Figs, Crocs, or On Holdings become like a Lululemon, you have, between a 10x and a 100x built in, especially if Figs does that. It's close to 100x, right? If Figs is able to pull it off, which is one of the reasons why I like Figs. So let me get started with Figs and talk about Figs now. So I've covered Figs multiple times on the channel. It's a teeny tiny position in my he must do something portfolio, nothing meaningful. If it goes to zero tomorrow, I won't even feel it. It's nothing meaningful at all. But I've covered Figs multiple times on the channel. What is Figs? They are trying to make scrubs, and scrubs are the traditional clothes for nurses and doctors in the healthcare space. They're trying to take scrubs and make them fashionable, make them trendy, make them everyday clothing, sell them for everyday user, just like Lululemon did with the yoga pants and took the yoga pants out of the gym. Figs is trying to do the same thing with the scrubs, and they're trying to make scrubs a mainstream piece of apparel. It's a Ron Baron favorite, like I've said. And Ron Baron, of course, is known for being an early investor in Tesla, and he's a very bright man. And so I hold his opinion on this stock very high. And really, Figs is applying the Lululemon playbook to scrubs. If you've seen any of my videos that I've done about Figs, you know that I've went on both websites, Figs and Lululemon, and compared the product offering. It's almost shocking how close the offerings of Figs are to Lululemon, and they're clearly trying to pull off that playbook. As far as the stock price goes, Figs, just like many stocks that went public in 2021, lost, 80 to 90% of its value, never recovered, and it's still one of these stocks that has not even moved and not even recovered yet. So the late 2023 run has not applied to Figs anymore, which is great, because it's still like a good buy. If you like to not chase, if you like to buy a stock that has not run yet, Figs is interesting. I'm not going to be adding to Figs. It's a tiny position for me. It's a play position for me. I'm not adding to Figs at these levels. Nonetheless, interesting play, noting that Figs has just become EBITDA margin profitable, and I see no reason why they shouldn't reach that EBITDA margin in the 20%, in a few years as they scale and as they sell more clothes. Let me move on to stock number 3, Crocs. So this is my first time covering Crocs on the channel, really briefly. Many of you in the comment section have told me, cover Crocs, you should cover Crocs. So there you go, I'm covering Crocs. So Crocs, when you look at the numbers, is very cheap. It's very profitable at 27% EBITDA margin, so it's more profitable than any stock. It's clearly a value stock at a 1.96 enterprise value of revenue, and all of these metrics. It's a very inexpensive stock. So let's let trading at less than 2 times sales. The gross margin 74%, EBITDA margin 27%, expected to grow at 21% over the next 12 months. So much more than the U.S. economy. So it's going to grow faster than that. And all around, if I just were to look at the numbers, it's a better stock than Figs, if I were to just look at the numbers. But to me, and I want to point this out, to me, picking the best apparel stock or the best footwear stock, and Crocs wouldn't be more of a footwear stock, it's clearly a footwear stock, it's all about the qualitative assessment. It's all about your assessment of the brand. And if you've seen Crocs before, these shoes were very popular in the late 2010s. I don't know if you've ever seen these bulky shoes, but you can see just by looking at them how profitable it would be to make this shoe. Look at this 74% gross margin. Well, this is just some injected plastic type material in a mold, and you could see how easy these shoes are to make. It's probably heaven to make these shoes. It looks very easy to make, and so you can see why that gross margin is so high. As far as the style, it's just a matter of opinion. This is not the type of shoe that I would wear. However, I know that from reading their investor presentation and from looking at it, the growth of Crocs right now is all about Asia and especially China. And these shoes are very popular in Korea, very popular in China. And so much of that growth, that 21%, you have flatness in the West, and you're growing at more than 30% in Asia for the product. The product is all the rage in Asia. It reminds me of Dickies. Dickies a few years back was the same way. This is one of these examples of a brand that may not be as popular in the West as it used to be, but is all the rage in Asia. So that's kind of an Asia play if you buy Crocs, in my view. And again, I have no opinion about Crocs. This is not a stock that I'm going to be buying just because I can't really relate to the product. But nonetheless, the numbers look better than Figs. Definitely the numbers look better than Figs. And the stock price has not done much for the past 2 years, like many innovative stocks. And the last company that I want to cover, the last stock that I want to cover is My Surprise. My Surprise, and this is again thanks to my viewers. So thank you if you recommended this. You recognize yourself in the comment section. Thank you for recommending it. Its stock number 4 is On Holdings. On Holdings. It's a Swiss company from Switzerland. And actually, I downloaded the investor presentation, started studying it a little bit, and they appear to have almost 50% brand awareness in Switzerland, close to 25% brand awareness in Germany. But if you go to pretty much any other city of the world, the brand awareness is going to be right around 10%, maybe less than 10%. So it is not surprising that most of us, I would argue, I mean, definitely not me. I had never heard of this brand of running shoes, right? When you think of shoes, we think of Nike, we think of Adidas, Asics, but we don't necessarily think of On Holdings, and that's because it's a new brand. It's a new brand that has very limited brand awareness for now, but it's growing very fast. And why is it my favorite? Well, you won't be surprised if you follow the channel. It's my favorite because I'm seeing this tantalizing sales growth number, and I'm a growth snob, and I see that this company is predicted to grow at 51% next 12 months. That's stunning. That's amazing. I love this so much, and because of that, it's getting the second cheapest score in my EV over gross profit over revenue growth metric, my spin on the peg ratio. It's the second cheapest. Very appealing right here. And for a product which I think may be a better fit than Crocs, or at least a more international fit than Crocs. I do not know the specifics as to why their running shoes are popular compared to other running shoes, and I'm not a running specialist, but this is something that if you're interested in this stock, you might want to discuss with a running enthusiast. But if you look at this, we're looking at 51% next 12-month revenue growth and EBITDA margin profitability, the third most profitable stock out of all of these four, but at 11%. it will be, I think, a fairly easy drive for them to get to 20% EBITDA margin. And if they still grow at 50% back then, when you may get into a rule of 70, this is right now a rule of 60. Absolutely amazing stock. They seem to have a land and expand growth model, and they seem to be focusing on big cities as opposed to be focusing on countries. You may be familiar with, say, if you follow a company like Shake Shack. Shake Shack was doing that. Like, it grew from major city to major city. They seem to be doing this, focusing on selling their shoes and growing within core running communities. And they've launched a store in Paris recently, and they're trying to launch stores and operate stores that are community-based, community-driven, and all around the runners. On Holdings is definitely a neo brand. It's a new brand that exists because of the digital world and how easy it is today to create new brands in the digital world. You don't have to go through the distributors anymore who hold the shelf space. You don't need shelf space anymore to sell anything, right? People buy online. And as a result of that, they have a direct-to-consumer heavy sales model. And from the numbers that I look at, this is as much as 60% direct-to-consumer sales. So this is something similar that we're seeing, for example, in the makeup space. You may remember 2 weeks ago, I made a video on makeup, and I said that, I'm impressed in a brand like Oddity because it's all about direct-to-consumer and really undercutting the distributor, undercutting the middleman. This is the same story here. If they keep growing virtuously by undercutting the distributor, by not being in any standard footwear store at the mall, but really controlling how they sell the shoes, they retain that margin and they retain that growth and they retain the brand. It's also noteworthy, and I love that about them. They want to be the most premium global sportswear brand. Right? Notice how they said sportswear. So sportswear is not just shoes. This means that they have plans to expand beyond just shoes. And in fact, from the little bit that I read about their investor day, they seem to have a very popular sports bra that they're selling right now. So not just shoes, but more of a lifestyle brand. That we are launching. So anyways, this is a conversation I believe to be had with people who run and who may be able to speak more highly of this. I think this is a company that would be easy to see if you're in the running space. It would be very easy for you to assess whether this is a winner in the running space or not. But when I look at the numbers, this is the company that I like the most, especially with that level of growth. And the stock is also still largely, in my view, ignored by the market. It's been roughly trading at the same level since April of 2023, despite having such outstanding growth numbers, next 12 months, 51%, and really enterprise value over revenue is trading at 4.4 times sales. Really not that much for a company predicted to grow at 51%. So love this last one. This last one is a pleasant surprise. Let me know in the video if you know more about On and if you want me to cover On a little more on this channel. Let me know in the video, in the comment section about On Holdings and what you think about these stocks. Anyways, this was not investment advice, no financial advice. This is just entertainment. Please like, please subscribe, and have a wonderful day. Thank you for watching.